Greenspan was a hard money guy. He was a gold fund, a gold standard advocate, an Ayn Rand disciple, objectivist, libertarian, right? That's who Ronald Reagan picked to be Fed chairman, right? He didn't necessarily realize, all the things he would do later on, but he picked a guy that he thought was a real free market gold standard guy. Trump is not going to nominate somebody like that. He didn't nominate somebody like that because he nominated Powell, right? So again, all the people who think, Donald Trump is going to succeed where Ronald Reagan failed, it's not going to happen.
In today's episode, Peter Schiff underscores the enduring value of gold and silver as safeguards against economic uncertainty. With U.S. debt nearing $37 trillion and inflation expectations rising, these metals remain essential for preserving wealth. While optimism surrounds political and market shifts, Schiff warns that underlying economic weaknesses and fiscal mismanagement make gold and silver critical in any portfolio. He talks about Bitcoin's surge past $100,000 has been driven by speculation of government adoption, but Schiff remains unconvinced. He critiques Bitcoin as lacking intrinsic value and warns it operates on a speculative bubble rather than being a viable alternative to gold. Schiff also highlights contradictions in Bitcoin's narrative, now reliant on government support, and predicts a potential collapse as hype subsides. Additionally, the American economy faces mounting challenges, including falling labor participation, shrinking trade, and soaring consumer debt. Schiff argues that government policies are inflating bubbles rather than addressing systemic issues. With rising inflation and ballooning debt costs, he stresses the need for reduced spending and sound money principles to achieve long-term economic stability. Now, we'll show you the best clips, but first, make sure you hit the like button, smash the subscribe button, and check the pinned comment. We're offering a big discount in NordVPN, which is an essential tool if you want to browse the internet in a secure and private way. Don't miss out.
The big news that came out earlier today was the jobs report. Although we just got the consumer sentiment, that number came out earlier today as well. And I want to comment on that before I get to the jobs numbers, because we had a big jump in consumer sentiment. And I read online that this is the biggest post-election jump in sentiment since the election of Bill Clinton in 1992. So Americans are optimistic because of the election of Trump. And this is something that I expected to happen. The reason that they're optimistic is because things were so gloomy. People now think that, okay, we got Trump, we can get rid of Biden, we're not going to have Harris, he's going to make America great again. And that's great. People are looking forward to that because they've been struggling with a weak economy, rising inflation, rising debt, and they're optimistic that Trump's going to make those problems go away. Now, again, I don't share that optimism, but I understand where it's coming from. And so we had a spike. It went from 71.8 up to 74. So before the election, 71.8, now 74. If you look at the inflation expectations, though, which obviously the Fed won't like, the year ahead inflation expectations went from 2.6 to 2.9. Now, 2.9, I mean, that's almost 3. We're heading in the wrong direction. Powell is convinced that inflation is heading back down to 2%. Well, he hasn't convinced the consumers who think it's headed more towards 3%. That might be partially why you have the stronger dollar today, the stronger sentiment, the stronger than expected non-farm payroll report, which I'm going to get to again. So the dollar index is once again above the 106 handle. A euro, I believe, is now back around 105, maybe a little bit below 105 euro to the dollar. Let me just take a quick look at those exchange rates. Well, no, 105.6, so not quite there. But the dollar has been strong. It's strong again against the Australian dollar in particular, which has been very weak of late based on some weaker than expected economic news there. Now, of course, we had a lot of weak news here, too. But again, investors are just dismissing a lot of the weak data because they just assume that it's going to turn around with Donald Trump. And I think the markets are wrong to make that assumption. But we did get the jobs numbers that came out, and they were also a positive. I think that also weighed on pushing up the dollar. I think that's also one of the reasons that gold is barely up on the day. Gold's around $4 higher, 26.35. It hasn't really been able to gain any traction to the upside. And mining stocks are getting hit hard again today, even though their costs are coming down as far as their local labor costs with a strong dollar. I think all the optimism about the stock market is causing some pessimism in the gold mining sector. And of course, and I will talk more about Bitcoin in this podcast today, because right after I finished my last podcast, I mean, as soon as I got off doing it, Bitcoin spiked up, got above 100,000 for the first time ever. It almost hit 104,000 on that spike, and then it stayed above 100,000 for most of the trading day on Thursday. And then late in the day, after the U.S. stock market closed, there was a big sell order that came in, and Bitcoin collapsed. Not really collapsed, but it had a big drop in a few minutes, and it went down from above 100,000 to below 93,000. It has since recovered, and as I am recording the podcast today, a little bit before the close of the market, we're back almost at 102,000 per Bitcoin. Of course, I got a lot of flack online because occasionally I said I didn't think Bitcoin would ever get to 100,000, although there were plenty of times where I conceded that it could get there. I didn't expect it would get there. And but for the election of Donald Trump, I don't think it ever would have gotten there. And I will get into the irony of that a little bit later in the podcast. In the meantime, I want to talk more about the economic data that came out this morning, in particular, the jobs data, because we got some weak jobs data according to ADP. And I went over that weak data on the podcast I did on Wednesday. And I thought that we would probably get a weak report today as well. Well, it turned out that the numbers that we got today were actually better than expected. Not a lot better, but they were better. Although, again, you got to take all these numbers with a grain of salt, because just because we got a better number the first time, we could end up with a much worse number when they go ahead and revise it. And they may not just revise it next month. They can revise it in 6 months. They can revise it in a year, right? They can come back and say none of these jobs were actually created. So all these numbers are meaningless, which is, even more ridiculous that the Fed claims to pay so much attention to this data, right? They're dependent on data that is unreliable. So what does that tell you about the reliability?
In today's news recap, silver price rebounds off $30 and heads to $32 as USD retreats after weak U.S. data. Silver has been showing resilience this week, climbing $1.50 with the USD dollar in retreat, supporting the bullish momentum we predicted on Monday. As the Federal Reserve prepares for its final rate hike of 2024, silver prices have dropped $5 from recent highs over the past 2 months. However, the metal has found strong support around the $30 level, with the 100 SMA on the daily chart acting as a key technical floor. Renewed buying interest in this zone has halted the sharp sell-off that ended late last week. Silver has shown signs of recovery this week with a hammer candlestick pattern, a classic bullish reversal signal emerging after the recent retreat. The upward momentum strengthened yesterday, fueled by weak U.S. economic data. The ISM Services Index revealed a sharper than expected contraction, reflecting cooling demand and employment in the services sector. Additionally, the ADP report highlighted slower job growth in both goods and services, signaling a softening labor market. The weakening economic data has eased concerns about aggressive monetary tightening, providing a boost to silver as a safe haven asset. With supportive technical indicators and shifting market sentiment, silver's outlook appears increasingly positive heading into the year's final stages. Silver declined to $30.43 yesterday before stabilizing and climbing to $31.46, marking an intraday gain of approximately 1%. This movement reflects the interplay of global economic concerns and growing expectations for a U.S. interest rate cut. Amid economic uncertainty, safe haven assets like silver continue to attract investor interest. Market sentiment has shifted toward a higher probability of monetary easing, with a 75% chance now priced in for a 25 basis point rate cut in December, up from 70% following weaker than expected U.S. economic data. This expectation could further boost non-yielding assets such as silver, even as the Federal Reserve signals a longer-term policy of elevated interest rates, with only 2 modest cuts anticipated in 2025. Technically, silver faces resistance near the 31.70 level, where the 50-day SMA serves as a potential barrier for buyers aiming to extend the recent rally. Now, we'll show you more clips, but first, smash the subscribe button and check our pinned comment if you're a stacker, because we have a special promo with NordVPN. With NordVPN, you'll make sure that your data is never exposed and that you browse the internet in a discreet way, which is very important if you're doing consistent investments. Link down below.
I got to talk a little bit about Bitcoin, but before I just start going into Bitcoin, I want to speak about what Jerome Powell said about Bitcoin at the Deal Book Conference on Wednesday, because I actually forgot about that, because I talked about that conference again on my Wednesday podcast, and I totally forgot about that aspect of it. So it's just as well, because maybe it's even more appropriate now with Bitcoin trading at 102,000 per Bitcoin to discuss it. But so Powell was asked about Bitcoin and whether or not he saw Bitcoin as, I think, a threat to the dollar or something like that. And he said, no, I don't think of it that way. I don't see it as a currency. I don't see it as a competitor to the dollar. It's not a currency. He said it's a highly volatile asset that's like gold. He said it's digital gold. And so I see Bitcoin as a competitor to gold, not a competitor to the dollar. And of course, that's exactly what the Bitcoin community wants to hear, right? Because they claim that Bitcoin is digital gold. And so now they've got the chairman of the Federal Reserve making the same claim. So he's validating the idea that Bitcoin is digital gold, right? And I get a kick out of the fact that now all these Bitcoiners, they all love Powell, right? Oh, yeah, he says Bitcoin is digital gold. Yeah, but Powell gets a lot of stuff wrong, including that. I mean, Powell doesn't understand gold at all. And in fact, gold is a competitor to the dollar. Maybe he doesn't understand that. So if he thinks Bitcoin is digital gold, then it should be a competitor to the dollar, because central banks have a choice. They can hold dollars or they can hold gold. And apparently they can hold Bitcoin, according to Powell. And so it is a competitor, even if you don't think it's a currency. If you think it's digital gold, I mean, gold isn't a currency. Gold is money. So maybe Powell thinks that Bitcoin is money, which it's not. But he clearly doesn't understand gold. He doesn't understand Bitcoin either, right? He doesn't understand a lot. That's why he's the chairman of the Federal Reserve. But he's completely wrong. But this is also helping to power Bitcoin, having the chairman of the Fed basically bless this. Plus, because Bitcoin is now being, part of the U.S., right? It's part of Trump's plan to make America great again, is to make Bitcoin greater again. And now we're trying to marry the U.S. to Bitcoin. This is another irony of Bitcoin, because initially people said, the dollar is going to go down, same as me, right? Dollar inflation, budget deficits, we're going to keep printing dollars. Bitcoin is an alternative to the dollar. You need to buy Bitcoin because the dollar is going to go down. Now they're saying that Bitcoin is the salvation of the dollar. You don't have to worry about the dollar anymore because it's going to be backed by Bitcoin. So we're going to buy all this Bitcoin in a strategic reserve, and that's going to strengthen the dollar. So if Bitcoin is going to strengthen the dollar, then there's no reason to even buy Bitcoin, right? Because if you were buying it because you were worried about the dollar, well, don't worry, because Bitcoin's going to save the dollar. That's another inconsistency, as is the one about the debt. People said, oh, you got to buy Bitcoin because the debt is spiraling out of control. The U.S. has all this debt, and we're going to have to inflate it away. Now they're saying that Bitcoin solves the debt problem, because by buying Bitcoin, and the price of Bitcoin is going to go up so much that the U.S. government is going to be able to pay off the national debt just by selling some of its Bitcoin. So apparently Bitcoin solved the debt problem. But if you're buying Bitcoin because you're worried about the debt, but Bitcoin itself solves that problem, right? You got this circle that doesn't really work. It's kind of like a time travel paradox. But all this stuff is a bunch of nonsense. And you know what? I put a lot more stock into what Alan Greenspan said about Bitcoin, not when he was chairman, but recently in the last several years. By the way, Ronald Reagan appointed Alan Greenspan. Right? Ronald Reagan, again, was a real conservative, libertarian, Barry Goldwater guy, philosophically far more, in tune with the stuff that Elon Musk is saying, and the stuff that a lot of, hardcore Bitcoiners believe about the economy, right? And he picked Greenspan because Greenspan was a hard money guy. He was a gold fund, a gold standard advocate, an Ayn Rand disciple, objectivist, libertarian, right? That's who Ronald Reagan picked to be Fed chairman, right? He didn't necessarily realize, all the things he would do later on, but he picked a guy that he thought was a real free market gold standard guy. Trump is not going to nominate somebody like that. He didn't nominate somebody like that because he nominated Powell, right? So again, all the people who think, Donald Trump is going to succeed where Ronald Reagan failed, it's not going to happen. Reagan tried to cut government spending and he couldn't do it. And he was committed to doing it, to his core. Reagan had real philosophy. Trump is a little bit different. I mean, Trump wants to be popular, and Trump kind of goes where the wind blows with a lot of these policies, but he doesn't have any hardcore, free market libertarian beliefs that we need a lot less government. That's just not where he is. I'm not saying there aren't things about Trump I like, but he's not as good as Reagan, and Reagan couldn't deliver on actual promises when they were easier to keep. The debt to GDP was barely over 30% when Reagan came in. I mean, it's 125% now. So it's a Herculean task that needs to be accomplished. And we couldn't accomplish it when it was much smaller. But if you look at what Alan Greenspan said about Bitcoin, he said it's nothing like gold. He said it's unlike gold. It doesn't have any intrinsic value. He said that Bitcoin is based on the greater fool theory, which is exactly what it's based on. It's just based on somebody paying more money than the next guy, and the belief that, if you buy it, someone else is going to pay more. Now, the main reason, probably the only reason that Bitcoin is over 100,000 now, I think, is because of the belief that the greatest fool is going to be the United States government, that the U.S. government is going to buy Bitcoin. Yes, Senator Loomis introduced this bill to require the U.S. government to buy 1 million Bitcoin over the next 5 years, regardless of the price, right? No matter what, even if it's $1 million of Bitcoin, the U.S. government is committed to pay that price. And of course, it has an unlimited checkbook because it cranks off the money. So if people believe the U.S. government is going to buy 1 million Bitcoin, maybe more, I mean, maybe that's just the opening bid, who knows? And people are speculating that if the U.S. government buys Bitcoin, well, other governments are going to have to follow suit. All these governments are going to be buying Bitcoin. So if you think all these governments are going to forcibly take the public money and buy Bitcoin, remember, I've never bought Bitcoin because I don't want to buy it. But if the United States government buys it, then I own some. I didn't want to buy it. The government bought it by force, right? So initially, Bitcoin was born on the idea that it's about freedom and sovereignty and anti-government and move away from the government. And now it's completely dependent on government. It's not it's not like the free market. It's the coercive power of the state that is now behind Bitcoin because it's going to go in and buy it. So I think they ran out of private sector buyers to keep the pyramid going. But now they paid off all these politicians. Now, they may not actually buy it. And I don't think the Bitcoin reserve is ever going to happen. I mean, it could.
That's it for today's video on Peter Schiff's take on gold, silver, Bitcoin, and the economy. Do you agree with his views? Are you on board with his criticisms, or do you think he's missing something? Let me know your thoughts in the comments below. I'd love to hear your perspective. Don't forget to like this video and subscribe for more content diving into the world of finance, economics, and the voices shaping the conversation. Thanks for watching, and I'll see you in the next one.